Welcome back to CryptoBanter.com. I'm Crypto Man Run, coming to you live every day at 10 a.m. EST. Yep, we chose 10 a.m. EST so that the whole world could get the live calls made here at CryptoBanter.com. It's 7 a.m. in Los Angeles. It's 10 a.m. in New York City. It's 5 a.m. It's 5 p.m. in Europe and in Africa. So let's get this show on the road. Now, if you watched our show yesterday, we told you to sit tight, put in those orders, and let the market do its thing. And that's because we knew the market would recover very quickly. And it did recover very quickly. In fact, Bitcoin dropped 30%, recovered, and is now trading between 15 and 20% below its all-time high. Well, what happens next? And was that a dead cat bounce? That is what we're going to find out on today's episode. We're also going to look at the fundamentals versus the pumpermentals. We're going to make sure that there's nothing broken in the fundamentals that could change the market structure. And if nothing is broken in the fundamentals, well, then that means that it's all up to the pumpermentals and that we must just sit back and wait for the pump. And then we've got a whole lot of altcoin calls for you guys. Yesterday, if you listened to our altcoin calls, you would have made a lot of money. We called ARWEAVE, we called Zilliqa, we called Bird. ARWEAVE bucked the trend, went to about $4.10. We called it at about $3.50. Zilliqa also backed the trend and went up. Bird also 20% up on the day. So if you did miss the calls, don't miss the calls today. We've got a whole lot more calls for you today. And then we're going to banter. We're going to banter with Mati Greenspan and Trader XO. He's a great new addition to the show. He's also bringing a lot of calls right here to CryptoBanter.com. So if you are watching us on YouTube, hit that like button and hit that subscribe button. Give us some love, not only because you want to share this content, but because you want to pump your bags. And remember, hit that bell button too, because that bell button is what makes you get alerts whenever we go live. And with the crypto markets moving like they're moving now, we're going to be going live a lot. Make sure that you subscribe, like, hit the bell button and press all, and that will make sure that you get all our content. So without further ado, let's get this show on the road. I'm Crypto Banter.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yep, CryptoBanter.com, and this is where you talk crypto. Just a reminder that this is a call-in station. If you do want to call in, go to our website. It's www.cryptobanter.com, and there's a call-in button. Hit that call-in button, and you'll be brought straight into the studio. Join the conversation. Come in, banter with us. Let's talk crypto. Let's talk about what's going up, what's going down. Challenge our calls. We've got some big calls for you here today. Challenge us. Come in, banter. This is what the station is all about. We're here to bring you live trading information and also to leverage our beautiful community, the community that's given us so much love, that's taken us over 50,000 subscribers on YouTube, and that is making our show grow each and every single day. We are so grateful to our community. Thank you. Give us some love. Hit the like button, the subscribe button. Also, I'm reminding you that today I'm giving away a whole lot of Cardano tokens. Yep. Not only are they part of the big 1,000 ADA giveaway, but today, at random, to people commenting in the YouTube, I'm going to be giving away a whole lot of Cardano tokens. So let's get on with the content, because I think that's what everybody's here for. If you watched our show yesterday, you would have remembered that we pulled up this Bitcoin chart and we said, don't panic. The main reason why we said don't panic is because in any kind of parabolic market, you can expect pullbacks, and we think that this is just another one of those pullbacks. If you want more information, let's look at the pump in 2017. Let's look at the parabolic market that we had in 2017, and I found this chart that Altcoin Daily did. Look at that parabolic move that we had in 2017. We had multiple 38% bounces. We had multiple 33% bounces. We even had a 36 and a 29% bounce. That is before we hit the top. And that's pretty typical of markets as they go up. Typically, what you want to do is you want to be looking for high moves or fast moves in the Bitcoin price or in the price that you're looking at. And the minute that the parabola gets to high, fast moves, that's when you know that the market is getting overheated. And you could kind of see it because retail was starting to come in. People who don't deserve to make money were making money. And those were typically what we call the weak hands. And you know that when the weak hands are in the market, They don't know what they're doing. And as a result, what happens is they land up taking leverage. They buy. They think that the token or the stock can only go up. And then when the stock goes a little bit down, or Bitcoin went a little bit down, everybody started to panic because these guys were over leveraged. They thought you could only make money. They took positions that were much, much, much too big for their balance sheets. And as soon as we had a small pullback, everything fell apart. And that's why we had such a big pullback. Now, to make matters even worse, as usual, we had Coinbase crashing. Now, I don't know how much you guys remember of 2017, but rest assured that every time there was a pump in the market or there was a dump in the market, Coinbase used to crash at the time. The other exchanges also used to Bittrex used to crash, and a whole lot of others. Now, that disrupts the market a hell of a lot. What happens is people try and put in buy orders to catch the bids, and the buy orders just don't come through. Now, if the buy orders aren't coming through, the price is effectively in free fall. And because Coinbase also feeds a lot of prices to other people or to other institutions, they were feeding in prices without the buy. And at one point yesterday, Coinbase prices were trading as much as $300 or $400 on Bitcoin below the market price. So watch out for that next time. Watch out for Coinbase crashing. That is a big one that we need to look out for. Let's also carry on talking about this parabolic move, because we keep talking about this parabolic move. Let's take a look at what it means, and let's take a look at 2017. That's what we're looking at right here on the screen. You can see that in every parabolic move, you have pullbacks. It's not only in crypto. Look at this Tesla chart. If you look at that Tesla chart, and for me, Tesla is the one chart that is probably the definition of parabolic. And funny, it's actually for a stock, and a stock that outperformed Bitcoin a hell of a lot, by a hell of a lot in 2020. But you can see that there are big pullbacks in the Tesla charts as well. In fact, you've had one pullback from about 180 all the way down to about 80. You had another pullback from about 320, and that went down to like 280. So you have these moves when it comes to parabolic moves. And the best thing is just to sit tight. If you believe the thesis and you believe the fundamentals and you're not over leveraged, then sit tight and ride these things through, because chances are we're still in a bull market cycle. And if we are in a bull market cycle, the last thing that you want to be doing is selling your bags. You want to be selling into strength, and you want to be buying into weakness. And that's exactly what we said to you guys yesterday. We said that this is a healthy correction in a bull market. We said, put your orders going in all the way down. I had orders in yesterday at 33,000. I had orders in at 32,000, and they got hit. And when the price went down to about 28,000, obviously I was a little bit nervous, but hey, my thesis for Bitcoin this year is that Bitcoin is going to go up. I wasn't buying these things with leverage. And so it was probably a good call that I made just to hold these positions. And that's exactly what we did. I also told you guys yesterday to find an entry point into the tokens that you want to enter into. Things like DOT and Ethereum. We said a good entry point for DOT was about 780, and it hit 780 yesterday. And then it shot back up to $9. That would have been the easiest 15 or 20% that you could have made. Ethereum was well. We said if it goes under $1,000, be buying. Anything to do with DOT, Bitcoin, and Ethereum, in my mind, can't fail, and certainly not in 2020, or not in 2021. And we're going to talk about that today. We're going to look at the fundamentals driving these tokens. But before we get there, I'm going to bring in Matti Greenspan, because I know that he's the chart man. Matti, what do you think of my thesis? I mean, is this a quick correction in a bull market, or should we be worried?
It's what it seems like to me, Ron. I mean, we've been expecting a pullback for quite a while. I mean, the move from 10K to 40K, I mean, as we spoke last time, it was just monstrous. I mean, we don't usually see things like that. And the talk is that, you know, price targets around 100K, 200K, 400K, even from the biggest analysts in the world. So if we are indeed on our way from 10K to 100K, you got to assume that we're going to have some monstrous pullbacks. 2017 was a perfect example of that. We saw regularly 20%, 30%, 40%, and then it recovers a day or two later.
Exactly. You know, in a bull market, the quicker you get very quick recoveries, and you get market responding to positive news. In a bear market, markets don't respond to positive news. They respond to negative news only, or not at all. And they take a long time to recover. Now, you saw yesterday that it hit 28,000, and then it shot back up. It was back up at 33, 34, 35, and even 36,000 when I woke up this morning. So to me, we're well in a bull market. My advice to the viewers of the station is, don't look at the mainstream media. The mainstream media, devils here. Now, you guys know that I had a gig on CNBC, and I know how these big media agencies operate. Now, if you watch these big media agencies, CNBC, CNN, all of the even Financial Times and Forbes, if you watch these guys, up until yesterday, they only published bullish news. And that's was because the prices were going up. And yesterday, as soon as the price started to crash for the first time, what did they do? It was all doom and gloom. Look at the headlines yesterday. I mean, crazy. Cryptocurrencies investors could lose all their money. UK regulator warned. $150 billion from CNBC wiped off cryptocurrency markets as Bitcoin pulls back. Is there a bubble anywhere in sight? Bitcoin is back above 36,000, but big investors are wary as Mark Cuban, the oracle of Bitcoin, now starts raining on the parade. He says it looks exactly like the dot-com bubble. Bitcoin's Bloomberg, I mean, the geniuses at Bloomberg, how these people still have a job is beyond me. But read this. I mean, they're saying Bitcoin snap slide while leaving everyone in the dark on true worth. True worth is in the hundreds of thousands of dollars. You guys told us that in your reporting 3 or 4 days ago.
No kidding.
Yeah. Manny, what are the charts saying?
Well, first of all, I'd like to respond to what you said, because it is a pet peeve of our VP of content, Mr. Charles Bovaird, who is himself a senior contributor at Forbes. He's also quite decorated as a independent consultant at Moody's Analytics and the president and founder of the Financial Writers Society. I just found out last night the guy's a freaking Eagle Scout. He didn't even bother to tell me. In any case, and what he keeps telling me,
have him on the show and not you, man. And maybe
you are welcome to have anybody from my team on anytime you want. Just say the name and they're with you.
Fantastic.
But in short, what his pet peeve keeps coming because people look at the press as this kind of centralized organization, and it's really not. It's as decentralized as it gets. Charles has been writing positive things about crypto for as long as I've known him. And Billy Bambra at Forbes as well, same deal. So these guys don't really get bearish, and even you won't find any of those bearish titles. But they're decentralized organizations, so meaning there's a lot of different organizations, and there's also a lot of different writers within those organizations. So a lot of the at Bloomberg, I know a lot of the writers that write about crypto on a first name basis. Some of them are more bullish and some of them are more bearish. And when you get a slide like that, you're going to get some negative headlines. But I agree with your advice to not pay attention to the headlines, but for different reasons, of course.
Generally, we know better than the mainstream media. And so when you get information from the crypto community, the reporters and the journalists inside of the crypto community, even the YouTubers, the guys that only do YouTube, that information is probably more accurate and more up-to-date than what the Forbes guys are saying and what the CNBC guys are saying and stuff like that. I would recommend be careful when you read this, because these guys change like the wind. If you remember, CNBC didn't feature one Bitcoin story in the bear market. No interest. They even removed the little widget at the bottom of the screen that tells you what the price is. Despicable. And now in the bull market, every day there's a Bitcoin slot, and they want to talk to me, and they want to talk to Pump, and they want to talk to everybody else. So again, my feeling is avoid the mainstream media. Don't get caught up in this nonsense and this bullshit and this hype. Rather focus on the people like Mati and other people in the crypto community that you trust, and that's where you should probably be getting your crypto news from. All right, Mati, right. I'm going to because
I put another one on here where you can share my screen. I don't know if you see my screen sharing there. Oh, okay, it's on that screen. No problem. Yes, well, as we're talking about not watching the mainstream media, no, my team and I are mentioned in the mainstream media on a regular basis, so we do a lot of work with them. All right, so where are we at right now? We can see the top left is Bitcoin, the top left is Bitcoin, and the bottom left, or the top left should be Ethereum. I'll just change that for you now. I've been watching Ethereum quite closely, but here's the total of the pullback that we've seen so far. Top left, Ethereum, 32% pullback. Bottom left is Bitcoin. We see a 28% pullback. This is really picture perfect. We can see the incline, the monstrous incline is still quite there. The market did get overheated a bit. But we're still on a very sharp trajectory upwards. This is kind of in line with what we see, what we've seen in 2017, those regular pullbacks that we were discussing earlier. The middle one on the top here, that's Bitcoin on the short term, just on a short term chart, so we can see exactly what's happening. We did see a little bit of a retracement now back towards the lows, but I'm glad to say that that was completely reversed already, or at least we've got a nice wick on that on the daily chart. Below that is the altcoin chart, just to see which ones are all outperforming at the moment. I believe that one in purple, that's XLM, the one that I told you about last time on your show. I think that was a pretty good call at the time.
That was a great call at the time. I think since that it went up over 50%. You told us the day they signed the agreement with the Ukrainian government, the Stellar Foundation signed the agreement with the Ukrainian government, and then the whole thing popped with the United States regulation, the US OCC, and then Stellar popped even more.
Exactly. I think that as far as if we're saying that the institutional narrative is holding true, and it really is institutional money that's flowing into this market, I think that they're going to be very interested in Stellar Lumens for what they're doing, and for the network effect that they've built up, for their partnership with IBM, for the token burn, for all of those reasons. Let's give our viewers a little bit of fundamentals, not only technicals, because I think a great mix is something that's always good to have. So you've got Stellar Lumens. Stellar Lumens is a money settlement or money transfer protocol that was written by Jed McCaleb. Jed McCaleb was also the guy that wrote the XRP protocol. Unlike XRP, Stellar is run by a decentralized foundation who've proven that they are extremely, extremely responsible. If you remember, in 2017 or 2018, they burnt a whole lot of excess tokens because they kind of said, look, when we've done our roadmap, we're not going to need this money. And so we'd rather reduce the supply of Stellar Lumens and make our current holders less diluted. Correct. They also performed a lot of airdrops in the beginning. Rather than selling tokens out, they actually increased awareness by the airdrops. And I found with my work at Electroneum that airdrops are actually an extremely effective method for distribution of a token.
Yes, because it increases the community. It increases the community. It does that a lot. Stellar Lumens is talking to a lot of Latin American banks. They've got a stronghold in Latin America for money settlement or money transfer. They have signed with the Ukrainian government. They've signed with the Central Bank of Germany to assist them. Not all the agreements are talking about the Stellar Lumens chain. Some of them are just with the Stellar Lumens Foundation, but some of them may leverage the chain, and that only we'll know in due course. So here you've got a protocol that is actually being used, and then add to that the US OCC saying that banks can now settle on public blockchains and can settle using stablecoins, and you kind of get this feeling that Stellar Lumens is going to be one of the front runners because it was purpose built for money transfers.
Yeah. Thanks. This is the TradingView platform at the moment. It's the one the charting system that I use almost exclusively. And the one that you'll find in my daily newsletter I'm using as well, and often sharing the links to the charts that I publish.
Mati, can I ask you, if we do a show later on this week or maybe early next week where you literally teach us charting from scratch, teach us how to use TradingView, teach us how to get the lines. I know there's a lot of traders on our chat that would love that kind of information. So can we leverage you for that?
I appreciate the offer, but unfortunately I have an exclusivity on my trading course with Cointelligence. You can find it on our website at quantumeconomics.io. It's $100 and it covers everything from the ground up, from technical analysis and fundamental analysis.
I'll find my community of big trader to come and teach us how to use the charts. I know that's something that we all want. I certainly want to know how to better leverage charts. I mean, I can do basic charts, but very, very basic. All right, let's look at what else you're looking at, specifically in this market, specifically whether we're in a correction or whether we're going back into a bear market. Tell us what else you're looking at.
So as far as I'm concerned, I mean, I've gotten pretty much all in back somewhere near the lows yesterday. It's possible that it comes down further. If it does, I'll have to make a decision at the time if I want to double down or reduce exposure. But from what I see at the moment, I mean, as long as we hold that recent lows, I'm pretty sure this is over. I mean, obviously, whenever we deal with the charts, we always have to use the disclaimer: past performance is not an indication of future results, and blah blah blah. Do not invest more than you can afford to lose. But this is the pullback. I mean, this is 32% in Ethereum. I mean, we saw Ethereum dip below $1,000, which was a significant psychological level. We see it now holding above $1,000. This spike down, you see this right here? This, because it's a wick and not a solid candle right now, this shows us that the market was rejecting a further downward movement. It doesn't mean it won't happen, but the first attempt for the market to go lower was already rejected, which is why I feel confident now that the pullback is pretty much over. If you would have caught me an hour or two ago, I would have probably been, biting my nails and going, I'm not really sure. But I've gained a lot more confidence based on this one candle even.
Look, I wasn't really stressed because I lived through 2017 like the rest of us. The momentum in 2017 was nothing like the momentum that we've got now. And that's a map of or a chart of the corrections that we had in 2017. They were much scarier. There was much less liquidity in the market. So it was much scarier at the time. And so these pullbacks of maximum 30%, I know they're going to recover quickly. Where I'll start stressing is if we break the 200-day moving average, which we're nowhere near there. And
the 200-day moving average is like, what is it, like 14,000 or something? It's not even. It's not even like close to where we are now.
Listen, if you want to put it into perspective, the lows of yesterday were the levels that we saw 10 days before yesterday, for the first time. So it's just weekends. The market has gone up too much too quickly, and this is a healthy correction.
I think that's a good assumption to make. If we look at the 200-day moving average, it's at 15,000 right now. But the force of the move was such that it caused us to push way off of that, the 200-day moving average. We will meet it again eventually. The question is if we meet it on a pullback or if we meet it on, let's say, a flat line. We met it on a flat line back when it hit 10K, which was quite conducive to this bull run. I think that was actually one of the drivers of it was because the fundamentals of the technicals had switched bullish. But I also want to take a look at the volumes, man.
Yeah, let's look at the volume.
If you don't mind.
The volumes
have been off the hook. We've never seen anything like this, not even close. So this is 2000. This is the 2017 high of volumes is around $8 billion. I'm looking at Masari's terminal right now. Basically $8 billion at the peak in 20. This is their real volume, meaning we know that there's a lot of wash trading in the market, and Masari is doing their best to make sure that they're only getting the clean data, which is, of course, is a process, and I'm sure that their algorithms are proprietary, but this is the one that I'm using quite religiously to get a good indication of volumes, because I know that whatever I see on CoinMarketCap is going to be BS. But if you zoom in here, yesterday we went to a high $27.5 billion. So we're like, this isn't the same market anymore. Not from 2017 and not from 2019. We're already in a whole different league as far as the amount of money changing hands here.
Well, you need to take one look at what Grayscale published, and Grayscale published that they're getting pensions and endowments starting to buy their products now. Now, when that happens, you're not dealing with a retail investor who's buying $1,000 on Coinbase. You're dealing with these investors who are buying and buying and buying. Now, if you guys follow Grayscale had closed its funds for taking any more money until this morning. They only opened a couple of the funds this morning. And I heard that was because they were in a lockout period because there were just too many orders and they had to keep buying and keep buying and keep buying.
Yeah. So I wanted to run something by you also. I heard, I think it was JP Morgan analyst this morning saying that if an ETF gets approved, it'll actually be taking money out of Grayscale and therefore could cause a bearish pressure on the price. It didn't really make much sense to me, but I wanted to see what you thought about that.
So I think there's one of two options that will happen. One is that Grayscale will get the first ETF, and that kind of makes sense. They could get their trust could be allowed to transform itself or to move itself into an ETF without any fees, and that's because a lot of people, and specifically unaccredited people, are buying the Grayscale GBTC on the open market, and they're paying huge premiums. In fact, sometimes even up to 100% premium for buying this. So one option is that the Grayscale trust will convert into an ETF. If not, then you will get an ETF. And I'm assuming that the ETF will have fees which will be more or less in line with the Grayscale Trust. So Grayscale Trust charge 2%. That includes insurance, that includes custody, that includes everything else. And I imagine that if an ETF launches, then it will be more or less at the same fees. And then the trust may even compete with the ETF. Worst case, whatever people buy in the ETF, Grayscale will sell. I read the Grayscale agreement, and in the Grayscale agreement, there's no provision for redemption of the shares. So you can't give them back the shares and say you want your money back. You've got to sell your shares in the open market. So that's going to be pretty interesting.
Yeah. I see they flashed a question up here about a head and shoulder pattern. So I don't really see this as a head and shoulder pattern, but it could be translated that way by some, I'm sure. The chart for Bitcoin and the chart for Ethereum look very different as far as this is concerned as well. So that's also something we need to keep an eye out, because Bitcoin isn't the only one moving here. The head and shoulder, to me, this looks more like an incline with a pullback than a head and shoulders pattern does. Because if we're going to assume that this is the left shoulder and this is the right shoulder, I mean, we're going like this over here, right? I mean, it's like it's not like a normal head and shoulders that you would expect, which is more of a symmetrical pattern. It goes like bounce, up, down, bounce, and then plummet. Of course, again, when you find these type of patterns, head and shoulders or RSI or technical indicators, I mean, you always take them with a pinch of salt in any case, because it only gives you a little bit of the full picture. When I wouldn't, I'm not the kind of guy who's going to say, oh, head and shoulders, it's about to sell off, or reverse head and shoulders, it's about to zoom. Yes, you see the head and shoulders, and you couple it with 3 or 4 different other pieces of information, and then you can kind of get a picture of the analysis. To me, there isn't a clear neckline here. I mean, where would you draw the neck, right? Would it be 31K? Would it be 30K, 32K? I'm not really sure. There isn't a clear neckline here holding for support.
It's not a head and shoulders because the decline and the recovery happened too quickly. If you look at a traditional head and shoulders specifically on this chart, you would have wanted to see something more gradual in the decline and in the increase. Mati, do you watch Polkadot? Because we looked at DOT yesterday. We said that if you could get it under 780, it's a good time to jump in. It went to 780, went back to $9. Interested to hear your thoughts if you do look at it.
There's certainly a lot of hype around that one. I haven't tinkered with it myself. I know that a few of the analysts on my team have. If you like, I can get one on for you. I wouldn't.
Let's have a look at that. Let's have a look at that chart. That is the 4-hour chart on DOT. We called it yesterday at about 780. We said if you can get it under 780, it's probably a good way to go. It went very close to $9, and now we are back at about 820. I think that this is the winner. I think that in my accumulation strategy, I'm accumulating Bitcoin, Ethereum, and DOT. And in the next part of the show, I'm going to talk about it. I'm going to tell people why I'm accumulating those 3 as opposed to anything else.
Cool. Yeah, looking forward to it.
Amazing. Mati, anything else you want to share with us before you leave, before it's time for Mati to go?
That's it. Subscribe to the newsletter at quantumeconomics.io. Follow on Twitter and LinkedIn, and we'll see you soon.
I'm going to jump into the stream here. This is the producer, and Ran is back.
I'm back. Sorry, I was. It seems like I was kicked off my own stream. So, Adrian, thanks for jumping in, man.
There you go, buddy.
Alrighty, let's move on with the show. And as I mentioned to you guys today, what we're going to be doing is we're going to be looking at the pumpermentals versus the fundamentals. And if the market is going down, then what you need to ask yourself is, has anything changed? Is anything different from between yesterday and today, or between last week and this week? Obviously, the mainstream media are jumping around, and the whole narrative has changed. We were always positive, and only positive stories about Bitcoin were being published. And then you look at the headlines today. They're talking about a bubble. They're talking about people losing all their money. And that's why I say avoid the mainstream media. Don't look at the mainstream media. If you're watching shows like this, then forget about the mainstream media. And again, I say I was there. I know exactly how they operate. They get the information too late, and they look for tidbits. They don't have as in-depth coverage as we have over here. And a reminder again, I am giving away 1,000 ADA. All you have to do is comment. I want you guys to hit the like button, the subscribe button, and comment. And then one of the comments I will choose, and we will give them 1,000 or 100 ADA today, but we'll keep doing it and keep doing it and keep doing it, because we want to make you guys money in any way which we can. So let's get straight into it. Let's look at the fundamentals. Have the fundamentals changed? And you'll remember that when we spoke about crypto fundamentals a few days ago, we said that crypto now has the network effect. And the network effect is actually a scientific or an economic principle. It's not just something that we suck out and say, oh, something has the network effect. And it's the same thing that most big companies in the world have. Well, not most big companies, but companies that have very high valuations. So companies like Facebook, Google, Amazon, Twitter, Uber, those companies will all have what's called the network effect. Now, the network effect effectively means that the more people that join an organization or a system or a protocol, the more that system will continue to grow, because those people add value by virtue of the fact that they're part of the protocol. And effectively, we broke it down into two laws. These are economic laws. These are economic principles. And they apply to any company or any protocol with the network effect. And we said that the first law was what they called the Parabolic law. And the Parabolic law says that when one node gets connected, it's more likely that more people will flock to that node. So what he's saying is, the more something gets popular, the more people will flock to that. And if you look at things like Facebook or Instagram or WhatsApp or Uber, the more those companies grew, the more likely people were to use them. And then there's another law called Metcalfe's law, and Metcalfe's law states that a network is proportional to the square of the number of connected users. So what that means is that the more users that you get, the more the value of a network goes up. And it goes up exponentially. It doesn't go up linearly like 1 + 1 + 1, but actually goes up to the square. Now, why am I telling you this? Because when we look at Bitcoin, let's look at the fundamentals, not the pumpermentals, the fundamentals. And the fundamentals are telling us a story. What they're telling us is that the active Bitcoin addresses are growing. And if you look at this chart that I've got for you up on the screen, what that chart shows is it shows the number of active Bitcoin addresses, and it correlates that to the price. Look what happened in 2017. As the active addresses went up, so did the price. And then it went down again. And if you look at what's happening in 2021, we're at exactly the same place. Very interesting to note that the number of active addresses now is only just equal to the number of active addresses in 2017. So we've got a whole long way to go. And that's not limited to Bitcoin. If you look at ETH, ETH is also getting the network effect. Look at the growth in the number of active addresses, and then compare that to the price. And what we're saying to you guys is, fundamentally, the growth of Bitcoin and Ethereum continue to grow. Now, you apply that, you add this law that I told you about called Metcalfe's law, which says that the more organization or a protocol grows, the more it continues to grow exponentially, and you'll realize that these guys have become indestructible. And by indestructible, I mean that once a company has the network effect, or once the protocol has this network effect, it is impossible to stop it. In fact, there are only three things that can stop a company with a network effect. One of them is governments. Now, governments, they don't like companies with a network effect, because once they start growing, they become too powerful. And so governments may get in the way. And I don't think that governments are going to get in the way of Bitcoin or Ethereum or even Polkadot anytime soon. The other one is if the technology breaks. And the third one is if a 10x better competitor comes to the market. And again, I don't think we're seeing a 10x better competitor. Let's also look at some other factors which are not as much fundamental as they are fundamental. But the first thing that we can see is that the searches in Ethereum, if you look at the Google searches in Ethereum, we are now back to 2017 levels. So that means that not only do the people that learned about Ethereum in 2017 now know about Ethereum, but a whole new range of retail investors has come in and started to Google Ethereum. And what is Ethereum? That means that you can expect Ethereum to grow. Let's look at Polkadot. Same thing. And in fact, what you can see is earlier on this year, when Polkadot mooned or started to moon in August, you had a spike, and now you've got another spike. So it's showing you that social interest in these things is getting very big. Look at Bitcoin. There was a big jump in 2017, and we're not even anywhere near the levels now. So a long way to go in terms of socials, but the socials are positive. It means that more people are getting into Bitcoin, more people are getting into crypto, more people are getting interested. And I'm sure if you're like me, a lot of your friends have pinged you in the last couple of days and said, how do we buy Bitcoin? How do we buy Ethereum? Should I buy Bitcoin? Am I buying the right Bitcoin? Am I buying Bitcoin? Am I buying Bitcoin Cash? So with all that happening, the interest is here. And if you've been watching Crypto Banter, you also know that the gold bugs are moving into Bitcoin. In fact, we ran an interview the other day where we saw that institutions were moving their gold holdings into Bitcoin. And in fact, we were moving into a position where we were getting institutional FOMO. I want you guys to take a listen to this. I played this yesterday. I'm going to play it for you guys one more time.
Started like that. But yeah, gold is getting pounded today. And, the one thing I would say to investors that are into gold is stick with it. This to me is a classic retrace. It had a great move up. It's seeing a sell-off. If you look at the chart here, you can see this channel that it was in, which is actually a bullish channel. And you broke above the channel. Now you're kind of back in. But keep an eye on this area here, because if it can close right around this, then I think this is just a run-of-the-mill pullback. Now, this is a big pullback to be run-of-the-mill, and I understand that. But the one thing to keep in mind is that, you know, right now you have this panic into Bitcoin, and I'm a big fan of Bitcoin. But it is getting a little frothy. It's a little insane. Just the last time you had me on, I think it was around 22,000, and that was just a few weeks ago. So we're basically double that. And I think you have a scenario where investors are saying, and this is kind of not the longer term holders, but the shorter term investors are saying, why am I in gold when Bitcoin is going up 5% every single day or 10% a day, and they're selling their gold assets? And I think as a logical investor, you want to step back and say, wait a minute, don't let me get swept up in this euphoria. Stick with gold as part of your portfolio. Now, it doesn't mean you can't have some Bitcoin in your portfolio, but don't go running for the hills, especially considering gold is going to go up continually. The dollar is going to get depreciated. It's going to fall more. We know the Democrats took the Senate now. That means more printing of money. So look for gold to perform well, even on pullbacks. And I'd be a buyer here. I really would.
As I said to you guys before, I'd also be a buyer here, but I'd be buying Bitcoin. Absolutely, I wouldn't be buying any gold at this stage. I just don't believe that there's any use case for anybody to be holding gold. We've got a much better version in Bitcoin. We've got a version that you can divide very quickly. You don't have to smelt it. You don't have to store it in these big storage warehouses with big security. You can store it in a small wallet, and you can send big transactions around the world in seconds. So I think that in 10 years, no one will be holding gold. But more importantly, we're seeing institutional FOMO. And that's the big message that I wanted to show you guys. Even the gold bugs, the big institutions that are typically in gold, are now starting to buy Bitcoin. So that's the market structure. Another thing that we are seeing, and I want to show this to you guys here today, we saw Michael Saylor saying on the 3rd and 4th of February, MicroStrategy will hold a Bitcoin for corporations. Now, that's super exciting because a lot of corporations and treasuries are looking at what Michael Saylor did and saying, can we do it? If you remember what Elon Musk said that he wanted to know if such transactions were even possible. And that's exactly what MicroStrategy are going to do. They're going to show the market how to do it. And the more people educate, the more people like Michael Saylor educate, the more we can expect more companies to put more of their treasuries into Bitcoin. And today, not even 0.1% of the funds in the world, and not even 0.1%, 0.0000001% of company treasuries all live in Bitcoin. So to me, the market structure hasn't changed. In fact, I'm more positive than ever about the market structure. There's nothing that has changed between now and 3 days ago. I'm still bullish on a Bitcoin price of 200,000 or 300,000 possibly by the end of this year, unless we see something else from the Biden administration. And I mean, let's talk about the Biden administration. You're talking about the money printing machine. In fact, I think what they're doing right now is they're actually oiling the money printing machine, so that when Joe Biden gets inaugurated on the 20th of Jan, it's going to be it's going to be so much printing. They're talking about this as the last stimulus, and they're talking about $3 trillion. There's going to be a lot more stimulus. The economy is broken. Restaurants are closed. The economy is broken. The stock market is running because all this extra money is going into the stock market, but the economy is broken. And they're going to need to do more stimulus. And we know the Democrats love stimulus. They're talking about more and more and more helicopter money for people like you and I. And those checks eventually are going to land up in gold, in the stock market, or in Bitcoin. And I think a lot more of it is going to be going into Bitcoin. So the market fundamentals haven't changed. So don't change your view. Keep accumulating on the dips and selling on the way up. Don't take too much leverage. Put in those orders. I've still got orders in at 28 and 27,000. Maybe they'll get filled. Who knows? Let's move on. Let's go on to the next part of the show. And that is, of course, the altcoin gem picks. If you watched our show yesterday, you would have known that we picked a whole lot of altcoin gems. One in particular, which I like on this list, and that is ARWEAVE. That is, of course, a file storage protocol. It's a decentralized file storage protocol. It competes with the likes of Filecoin, but it has a valuation of about 0.5% of Filecoin's market cap. Now, if you look at ARWEAVE, it has the best investors in the world. It has Multicoin Capital, Coinbase Ventures, Andreessen Horowitz. They bought their tokens more or less at the same price that it's trading now, maybe a bit lower. No one knows the exact price, but we kind of know more or less where they bought it. We also know that they're targeting this permanent storage, which no one else is targeting. They're calling it the permaweb. So for me, if you watched our call yesterday, we made the call at ARWEAVE at about $2. Yesterday, we called it again and we did a review and we said, guys, buy ARWEAVE, buy ARWEAVE, buy ARWEAVE. That was at around $3.40. Today, it was at around $4. So if you didn't buy it, you really, really missed out. Some more of the gems that we called. Zilliqa. This is a sharding blockchain. I think it got too badly hit yesterday. It went to 53 cents yesterday from a high of 80 or 90 cents 2 or 3 days before that. I just think that it got hit too hard. Let's look at one more that I called, and then I'm going to bring in some more calls for you, but this time it's going to be from Trader XO. So the last one that I called, or one of the other ones that I called Bird. And if you guys haven't been following Bird, Bird is an Oracle play similar to Chainlink. Very important in the DeFi space, and it's an altcoin gem. It's a very low market cap altcoin. I think the market cap is under $10 million. So if you are looking for altcoin gems, obviously much higher risk, and you can only buy them on Uniswap, but that is one that I would be looking at. Obviously, keep accumulating DOT. I keep buying DOT. 780, 790, keep buying DOT. I think DOT can do a 10x this year. I think it can catch up to Ethereum's current market cap, and I think Ethereum's current market cap is going to go up. But let's get some more calls, and this time not my calls, but actually let's get them from Trader XO. Trader XO, you are a great addition to the show. Welcome to CryptoBanter.com.
Thank you, Ran. Thank you for having me on the show. It's the first time here. Good to be on. Great, interesting sites on your behalf about Bitcoin and Polkadot as well. I'm a very big Polkadot advocate here. Huge fan of Polkadot. Yep.
If you don't follow Trader XO, it's Trader_XO, and he in the end of his name, he's got the whole Polkadot in brackets. So he's definitely a Polkadot fan. Do you agree with me that there's a 10x in Polkadot this year?
I believe so, yes. I think people confuse Polkadot's potential gains by looking at the market cap, and they think, oh, well, it's already, a very high market cap. How much more high can it go? But what people don't realize is that market cap is very elastic. As more money comes into the altcoin space, we saw in the peak of 2017, XRP was valued at $137 billion. So if that capital does flow eventually from Bitcoin into alts for a cycle, there's no reason why DOT cannot be a 50 billion market cap, which is potentially a 5-10x from these levels. Okay, so yeah, absolutely.
Let's look at my theory around DOT. So as I said earlier on the show, DOT's got the network effect now, and any company, protocol, anything that has the network effect pretty much can't be stopped. You've got people building on DOT. You've got venture capitalists investing in projects on DOT. In fact, all the best projects right now that are coming out are DOT projects. That's where all the hype is. DOT structure allows for it to scale quite a bit, with the main chain and then all the side parachains, which do all the interesting computations. That allows for it to be much bigger in my mind than Ethereum, because once those parachains start to fulfill the role of Ethereum, and then the main chain starts to fulfill this mother chain or main chain type of role, you've got this huge momentum that can be driven. So for me, to think that DOT 10x's itself and gets to 70% of the market cap of Ethereum today is not impossible. And there's a 10x in DOT, I think.
I agree. I think if you look at the ecosystem of DOT, the team behind the DOT, the number of projects that are building on DOT, it's just one massive, powerful ecosystem. Being a developer myself, if you look at the ease in which you can create applications, blockchain applications on DOT, it really does ease the development process, the development timescales, and it's much more cost effective for teams and projects looking to onboard, pick a blockchain, going with DOT in terms of interoperability. So one of the big things in this space is that we saw in 2017 many projects doing individual things, individual blockchains, but really for blockchain to develop and mature, we need to see more interoperability. And we're going to get that via the use of parachains and relay chains.
Bridges and
so forth, yeah.
So I'm going to interrupt you there for a second. Just tell the guys, we are giving away Cardano on the show. So if you're there, just start commenting, liking, and subscribing. This is the part of the show where we're going to start giving away. And then we have some breaking news. If you hold on for me 1 second, we're going to break some news here.
Breaking news on Crypto Banter, where you break the news.
And this is about Elrond. Elrond published that they are doing cross-chain interoperability for Elrond via the FIRE protocol. Now, whereas that may not be big news for Elrond because they're just using the FIRE protocol for the interoperability, if you look at FIRE protocol is a cross-chain protocol, a DeFi protocol that has a market cap of $1 million. which means that if Elrond is now using this for their cross-chain onto the Huobi chain, then this could be a small cap gem. I'm going to ask my producers to pull up the charts and share the screen when they can. Otherwise, yeah, we're looking at Fire Protocol, and again, that is because Elrond just published news that this cross-chain protocol is they're going to be doing cross-chain interoperability using the Fire Protocol. Alrighty, let's carry on with your calls, because I know you've got a whole lot of calls that you want to share with us. What tokens are you watching?
So basically, I'm watching DOT and Kusama. Kusama, if anybody isn't aware, Kusama is a cousin of DOT. So I think a lot of projects will be onboarding onto Kusama. So do keep a watch out for those two. My third pick would have to be Terra Virtua.
Hold on a second. Let's educate our users here. So a lot of people don't understand the relationship between DOT and Kusama. They're usually mentioned in the same sentence. But a lot of the viewers here, I can guarantee you don't know the relationship between DOT and Kusama. So tell me why DOT and Kusama are so married or so interoperated.
Well, essentially, they've both been built on the same core code base, the same architecture. The underlying principles are the same. Where the difference is, think of Kusama as being more of your rapid application type of development. If you want more of the latest features, you want to test and deploy something, it's going to be in Kusama. The big, slow-moving enterprise cog is DOT. That's the way to think of it. So think of it as your fast evolving, rapid application, cutting-edge technology, which is going to get launched on Kusama first, and eventually we will see parts of that being migrated onto a slower, bigger moving cog, which is DOT, essentially. In a nutshell, in my opinion.
Is Kusama going to be the first parrot chain or the first side chain in the Polkadot system?
That's an interesting question. I think we will have to wait and see. And I think if it does, it opens up many doors. But I think they're likely to be running separately. Polkadot will have its own parachain slots and relay chain, as will Kusama. So I'm not too sure if they're going to be cross-interoperable in the sense of Kusama being hosted on Dutch. But what's your views?
So yes, I mean, I think that, by the mere fact that Polkadot is sorting out interoperability, Kusama is going to be the first bridge. And I think that's why Kusama is very, very, very exciting. In fact, I like the whole DOT ecosystem. All right, let's do this. Sam Russell, you've won yourself 100 Cardano tokens, 100 ADAs. I see you in the chat. Rafael De Luna, third, you've won yourself 100 Cardano tokens. You've got, let's talk another one. We've got... All right, I'm going to carry on giving them away in a second. I first want some more calls from you. So DOT and Kusama, I'm a big fan of both. What else are we buying?
And in terms of the NFT space, I think the absolute Rolls Royce of the NFT space is Terra Virtua. Now, I know that currently they are giving out their token distributions to investors, so we may see some really good buying opportunities. But if you look at the team behind Terra Virtua, if you look at what they've developed, and given the massive growth of NFTs over the last 2-3 years in terms of dollars, billions of dollars are pouring in, Terra Virtua right now is sitting at 6-7 million market cap. This to me is a 50 million market cap project, in my opinion, which
Adrian,
is
Adrian, our producer, please call up the chart for us. I'm also going to try and call up the Terra Virtua chart. I want to show our viewers what this looks like, but it's got a very, very, very low market cap. You mentioned, what was the market cap?
I believe it's sitting at around 6-7 million market cap on CoinGecko. Yeah, 5.5 million market cap right now. I think it's a fantastic buying opportunity to dollar cost average into what I call is the Rolls Royce of NFT projects, platforms out there with a fully working platform in terms of exchanging and trading and sharing your NFTs. And they're going to have a whole load of partnerships down the pipeline.
Yes. All right. So DOT, Kusama, Terra Virtua, what else are we looking at?
So I think one of the slightly larger picks for me is Synthetics. I think if you look at its performance compared to most of the alts in the market space, it's holding up very, very well. And I think once alts start taking over, I think Synthetics will perform very, very strongly over the coming year.
I must say, Synthetics is going, in my mind, going to be in the top 10 coins in terms of market cap by the end of 2021. I did talk about that on one of my shows earlier this month. Go back to the YouTube stream and look for my top 10 coins for 2021. You'll find it there. That for me is it's the most important protocol if we're going to have a DeFi space. And that is because it creates synthetic assets, which means that we can create crypto derivatives on any kind of asset, which is a big one. I want to just point our users' attention, or our viewers' attention, to Fire Protocol, which we just shared. Before we shared it, it was trading at about 23 or 24 cents. Fire Protocol is now trading at 30.6 cents. Even at 30.6 cents, it's got a $1.4 million market cap. It's a tiny protocol. I'm going to try and get them onto our show to give us more information about what it is exactly that they do. And while I see this, I see Hatsunama. Hatsunama, you've got yourself 100 ADA tokens. And then you've got Ruben Jones. Ruben Jones, who says crypto banter rocks. You've got yourself 188 tokens. Okay, Trader XO, what else are we looking at?
I like Fire Protocol. It's definitely one I've already got. It's a bag of mine, so I'm really looking forward to what they can do. Thorchain is the other one. Rune, I think again it's up there in the synthetics bracket in terms of price. Price action is very, very strong in the market. It's proven itself, and the bounces are to be bought. The dips are to be bought.
So tell us why you like it. Just give us the ticker symbol. I'm going to get that up on our screen as well.
Yeah, so the ticker symbol is RUNE.
Okay, Thorchain. Of course, yeah, that is one that is one that we have been watching. The market cap is 285 million. Why do you think at a market cap of 285 million, there's still a long way to go here?
I think it's got huge potential. So given what Thorchain is, it's basically a decentralized liquidity network that allows users to swap assets instantly at manipulation-resistant market prices. And so therefore the swaps are done through permissionless cross-chain liquidity pools that allows users to stake their assets to earn trading fees. And I think we've seen the strength in the charts already as well, and it's just constantly grinding higher and higher and higher over the last several months. So I think once again, if we do see a full-on alt cycle, this I think could potentially double or treble in price. It is on a slightly larger market cap scale, but again, if we're looking for positive gains, I think this is definitely another one that I'm loading up on as well.
All right, so you're talking about Polkadot, you're talking about Kusama, you're talking about Thorchain. What else? Right. What else are we looking at?
So, funnily enough, in terms of alts, I've also looking at the ETH BTC chart. I shared a chart in the chat earlier on in terms of it's sharing a very similar fractal to silver. Now, I think if ETH BTC does eventually break out of resistance around about the 0.04 level, I think that to me would signal the intent that alts are ready to rally significantly hard. And could that potentially happen? I think it could potentially happen if we see Bitcoin pulling back lower and establishing a new base or a range for several weeks. I think that would be the perfect environment for alts to really start taking off.
Whoa. Now you've opened up a whole new can of worms. Can you share your screen? And
yes.
Can you share that ETH BTC chart? Because that's a very interesting chart for me. I'll tell you why that chart's so interesting for me. I think that Ethereum is going to be bigger than Bitcoin one day. I know that sounds crazy. I know that everyone's going, how can that be? Or why do you think that? But I've been saying it all along. In fact, I even said it in 2017. I know the Twitter army is going to go back and find my tweet where I said eventually Ethereum wins. And the reason why I say that is because Bitcoin right now is not a smart contract platform. And I think all the derivatives on the crypto market will be written on Ethereum. And the derivatives market is always much bigger than the underlying market. And so I think that DeFi, all the derivatives, that's all going to be written on Ethereum and Polkadot. And when we looked at in 2017, Ethereum was trading at about 0.1 to the Bitcoin price. And that obviously corrected or crashed. But now we're starting to make way. So interested to see what the charts say. Trader X, are you there?
Yeah. Sorry, I just cut off. So yeah, I think yes, I can hear you. That's a very interesting point you make. I would like to put a counter argument against that. Now we know that many individuals are holding their Bitcoin, correct? And we've seen how Ethereum has come on board and it's really taken the limelight in terms of liquidity pooling, farming, and the whole DeFi world. But my question to you is, doesn't the dynamics change if there is a bridge or protocol that allows Bitcoin to be farmed? Surely that would then incentivize more people to actually hold Bitcoin and potentially farm it. So that would be my counter argument, that if we do see the evolution of the ability to able to stake Bitcoin or farm Bitcoin, that could be a real game changer. Because
I think when you're thinking about staking, you're thinking about today's definition of DeFi. Now, I don't think that is what DeFi is. DeFi is when we take the world asset base and we create derivatives or finance protocols that allow us to use crypto assets and smart contracts to trade this asset base. So if you look at the stuff that's being built today on Ethereum, you're looking at synthetic assets like Tesla, like coffee beans, all being built on the Ethereum network. Bitcoin is not purpose-built for that. Bitcoin is purpose-built for slow transactions. It's not purpose-built for smart contracts. It's not purpose-built for lots of contracts happening at the same time. And I think if Ethereum get Ethereum 2.0 right, and even Ethereum, whatever happens after 2.0, if they get this right, at terminal point, later down the line, Ethereum is bigger than Bitcoin. Let's see what the charts say.
Yeah, I think that's an interesting one. But for me, see, for example, if we do get the pullback on Bitcoin, say, drop down to low 30s or mid 20s, and I think if Ethereum does really break out of this range here, I think that's when we're going to see a massive increase in price, not only in ETH BTC, but also ETH USD as well, where I think we will break the previous all-time highs of the ETH USD. So this is what I'm looking for, essentially, to see strength on the ETH BTC pair, break out the range, push up higher. And I think at that point, it would be safe to assume that Ethereum USD, like I said, could potentially hit the 2,000 levels. And you spoke about the network effect and adoption of more participants taking place, holding Ethereum. And I think that could be the case. We're not too far away from the all-time highs. I think on a weekly perspective, if we look at the charts, we have a weekly level round about 900, which I think, in my opinion, will more or less hold. If you do see a pullback back into the 900s or the 700s, that's a great buy the dip opportunity. And I think we will establish new highs in Q1 if Ethereum BTC breaks out of this range. We get the pullback on Bitcoin, pullback on ETH. There's your entry. This is where you want to be buying around these levels and start making new highs. Very similar to what gold has done. So let's just have a quick look at the gold chart in terms of price being fractal. I just quickly clean up my levels, but you can see what gold did. It kind of pulled short previously at the all-time highs, pulled back, pushed up higher, established new all-time highs, and you can see price now is more or less trading or holding the previous all-time high body candle closes and resting upon that level. So the question is, I'm not a patterns person. Is this a big cup and handle? Potentially. And I think like we've seen with Bitcoin is a hedge against inflation, and it's good to have exposure to hard assets. Are we going to get the pullback and push higher? Potentially. And we could see something very similar occur in ETH USD over the coming months. Looking for that price to break higher, pull back, and then continuing even higher to new heights that we're all looking forward to.
I must say, look, I accumulate Bitcoin, Ethereum, and I've started to accumulate DOT as part of my trading profits. So every time I make a profit, I cash it out into Bitcoin, Ethereum, or DOT. And now I've been focusing much more on putting my money into Ethereum and DOT, Ethereum and DOT. And that is because I think that my thesis is that we're going to see Bitcoin around the 40,000, 35,000, 40,000, 45,000. It's going to go sideways for a while. And then traders are going to want their adrenaline pump. And they're going to look for the adrenaline pump by putting money into ETH. And that's going to drive up ETH. And that's going to drive up alts. We're already seeing a lot of projects on Ethereum. I showed this earlier, and I'm going to show it again. But look at this. This is the social interest in ETH chart. Let me look at that. Let me call that up. That's a social interest in ETH chart. Look what happened in the last week. We are back to social interest above the levels of 2017. And if you look at what's happening in the Bitcoin chart, slightly different. We are at about 50% of the levels. So people are looking at Ethereum now. Everybody wants to know what Ethereum is. Everybody wants to know what Bitcoin, what DOT is. And that's where I think the price action is going to be. I wouldn't be selling Bitcoin, but I certainly would be accumulating more Ethereum.
Absolutely. I think people should also take a look at the Bitcoin dominance chart. Now, the way I view it is that I essentially invested. I don't know if you can see my screen anymore. Yes, we can. So if you look at the previous previous time when Bitcoin made an all-time high in 2017, December, early January 2018, we saw the alts rally off this level. Now, I've spoken about the fact that I expected the Bitcoin or the altcoin dominance. What I've done is essentially inverse the chart with a 100 minus, so it scales as if it's the altcoin dominance. And I've maintained and insisted that as long as this level holds here, I see no reason, to have any negativity towards alts. And I think as long as this holds and Bitcoin starts pulling back and ranging, we are likely to see the altcoin dominance push up higher in Q1, potentially Q2, before Bitcoin takes over its reign again. So lining this up with the ETH BTC chart, if we see strength on ETH BTC and the big altcoin dominance pushing higher, there's your cue for a very strong alt cycle over the coming weeks and months.
Well, that's our cue to say goodbye to all our viewers. Trader XO, thank you so much for your invaluable contribution to the crypto community and to our community. We love people like you. We'll stay in touch with you and let us know when you have more calls. Thank you for coming on CryptoBanter.com. And of course, if you have been watching us on YouTube one last time, give us love, hit the like button, hit the subscribe button. In fact, what I'm going to do is I'm going to go look for the people that did it last and try and give away more Cardano tomorrow, more ADA tokens, because this is a place where we try and make you money. So I'll see you again, same time, same place, 10 a.m. EST tomorrow. That is where you'll find me right here in our studio. I'll see you again tomorrow.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.